Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today with our weekly wrap-up. Graham, can you tell us what's been going on in the market over the past week?
Yeah, absolutely. Thank you, Stacy, and thanks for our viewers for being on the call. A lot of drama last week, kind of a mixed bag. We really saw the NASDAQ really rally from an indices rally the most, up about 4%, buoyed up by large cap or mega cap technologies that the market was viewing that maybe has fortress style balance sheets, strong balance sheets, cash reserves that can weather some of the crisis, some of the of confidence that we're seeing and issues with some of the regional bank area. It certainly didn't help to have Treasury yields pull back as they did. You know, we saw the 2-year Treasury notes yield pull back, the biggest pullback or the biggest drop since 1987. So that helped those growth assets really rally quite a bit. We saw the S&P up about 1.5%, but on the flip side of that, we saw the Russell 2000 slide about 2.5% on those continued uncertainties about the financial sector and those regional banks that make up a large percentage, or the financial sector makes up a large percentage of the Russell 2000. So we saw about 7 of the 11 S&P sectors gain ground in a week where it just felt like maybe a lot of things were going down because so much attention, and rightfully so, was on those financials, those regional banks, and the drama, the anxiety, the confusion that's going on with their assets and the viability of their being able to survive. So we had the U.S. Treasury yields really pull back. Like we said, the 2-year, the largest drop since 1987. We also saw crude oil pull back about 13%. So that was a big drop below 70 on fears of maybe this is going to push us into a deep or a deeper recession. Inflation did rise in February, but it was in line with expectations at about 6%, down from the prior month reading of about 6.4. So we are seeing a moderation. We think a lot of what's going on in the banking industry now and how that might be flowing over to the commercial real estate market and the consumers' concern with that could help bring down or help fight inflation that the Fed's been so persistently trying to bring down. If we look at the Fed officials do expect shelter cost to moderate, to come down a bit, but it is a lagging indicator, so we're still waiting to see that come through in those inflation numbers. U.S. retail sales did fall. U.S. manufacturing sector did see a pullback as well. Consumer sentiment, not surprisingly, pulled back for the first time in 4 months. If we look internationally, we still saw the Euro Central Bank lift rates by about 50 basis points, but signaling that they're here to build or backstop with some liquidity for the banks that are over there. We're seeing Credit Suisse and UBS in talks right now. That will hopefully shore up that big question mark that we have overseas. From a China standpoint, China retail sales for the first 2 months of the year did match expectations, but we did see real estate investments sink about 5.7%.
Okay. Well, Graham, it seems like we still have a lot of question marks surrounding those regional banks, and it's kind of a crisis of confidence, if you will. Do you think that's going to bleed over into other areas of the market?
I think it will to some degree, right? I think it has to be expected. You know, could it continue to negatively affect the commercial real estate market? You know, could the consumer may be a little more vigilant in terms of where they're spending their money, maybe pulling back? And the consumer has been very strong and holding up very well. So I wouldn't be surprised that this, and I think we are expecting it to do a lot of work for the Fed, so meaning the Fed doesn't have to be as aggressive in raising rates, because we think this is going to put some anxiety, pressure on the economy, the consumers, so on and so forth, which will help to bring down inflation. And obviously the concern is Will this push us into a recession that maybe we could have skirted? Would it make a recession maybe a little worse? So there still is some question marks on that, but I think that's the challenge of the market right now. How much will this bleed over to the other sides of the market and cause some negative effects?
I guess we'll see. So thank you
Right.
so much for that, Graham. And thank you to
You
our
got it.
viewers for joining us today. We look forward to seeing you again next week on the weekly wrap up. And until then, have a great week.
Take care.